Shidim Shari. Morning, Wednesday, July 3rd. Shortened trading day. I believe it's over at 1 o'clock today. So it could be a volatile day. We'll see. Well, it will be because jobless claim today is the heaviest econ data day that we will have. Okay. So watch out, especially on TLT. Um, But before I go, I want to take this brief moment to discuss the econ data yesterday, since I rarely make a particular video for a certain economic topic. So in case you tune into this, a little bonus. um, econ data came out yesterday, and jobless, job opening, JOLT, JOLT. My pardon my sniffling because my allergy is acting up today more than the usual. It's kind of annoying, but that's life. Okay. Well, anyhow, the job opening yesterday was something like 8 million jobs opening. Okay, and of course, the market didn't like that, right? Surprisingly, TOT held up, but at the end of the day, it is not something that those of us that thinking about weak economy was expecting to see a job opening so much. Now the job quit rate is low, um, but as I was mentioning to someone in the message group that if you follow the job quit rate, um, even in the worst of time, there is people leaving their job voluntarily. Smart people. Let me put it this way: if you are a good worker, if you are, the top kind of level talent in your field, and you're working for a company that you see are in trouble, and you can see layoff within your company, and you can go somewhere else safer, are you gonna stick around? So you know, use that kind of logic. You can see why there will be people leaving their job, even in this kind of environment. Thus, I said the smart people. Okay, it's just common sense to me. Um, Nothing shocking to hear that happened. And if you go back to 2007, 2008, 2009, yes, we still have tons of people quitting and move on to better position, safer position. Talent always going to be in demand. Okay, no matter what environment you have, talents always are in demand. Now, as far as job opening number, and this is the thing that collectively I am a firm believer that we, along with the Fed, are to blame. All right, and it's one of those things where the pandemic certainly changed the way we behave in general. Not maybe not me. I'm not looking for a job. I'm not doing anything like that. So I can say that for myself, it make no impact. But for the general public, um, it matters. Okay, it changed the behavior of consumers, worker, corporation. But I work in corporate America long enough to understand how things work. If you work in HR, Certainly, your job is to help your company manage the business properly. Okay, that's a key thing. If you work in HR, human resource, your job is to maintain stability to your business. And a big part of that is to make sure that if you have a lot of people leaving your company for whatever reason, you are ready to restock the body. Yes? Make sense? So, what happened during 2021, 2022, and a big part of 2023? What we heard that caused great concern to many companies? Quiet quitting, people leaving to make money on the internet, people going on their own. The younger generation doesn't want to work. Combination of all of those reasons. Tough to find skilled worker, right? All of that. So the job opening ramped up. So think about this. Let's say you have a company that have 100 worker, and through those years, you have on an average 10 people quitting per month. Surely you keep those job opening for those 10 position constantly in the marketplace, because on the average 10 people quit a month. You are there looking for those 10 replacement. Well, guess what if those things change, the status of the economy change right now in 2024, and instead of like 10 people quitting a month, it comes down to 3 people quitting a month? Most company will still keep that 10 opening open, looking stale. This is why you have a lot of younger layoff worker, or doesn't have to be younger, older too, but there is a big complaint right now on social media about ghost jobs, because a lot of company have jobs opening out there, people apply for them, and they hear nothing back. And if they're lucky, they got a job interview, but then it went nowhere. No one is hiring because company are trained from the past few years to keep those job opening there. So that 8 million job opening isn't true. It was true 2020, 22, when people was quitting at that rate. Right now, it is a lot less. And so those 8 million job opening is not real. And this is what problematic for the Fed. It's problematic for those that follow the economy, because we're just like, how can this be? You hear and read everywhere that jobs are hard to find. People complain loudly. Quiet quitting has turned into loud begging, loud complaints that no one's hiring. But yet, Mr. Powell is on the podium talking about it is a very healthy economy. Job opening is still robust. He loved to use that word, robust. It's robust. Out of touch. He is out of touch, and unfortunately, the people will suffer because he's out of touch, and not much we can do. Okay, it's because that's why I go back to what I said at the start. It's collectively we are the problem. HR is a problem because they can't unthink what is going on in 2022. People are very slow to move, to adapt. As much as I complained about Mr. Powell, I also complain about the HR department everywhere. Okay, what's going on is a direct result of worker behaviors in the short 2 year span of quiet quitting. But now everyone is so scared into facing trouble hiring. So everyone's so scared that's a oh my God, we are where we are because men are scared. Yes, I specifically point to men. So scared. All right, off the podium. If you last this long through this video, I hope you enjoy my rant. Oh, I love ranting. Oh, trust me, if I was on YouTube ranting, it would be a whole lot more fun than doing boring stock chart. Trust me, for those that know me well, I could go on a rant that would just go off the rail. Uh, and I enjoyed that. That's the thing. Yes, I'm a sick man. All right, enough. First up, General Mills. Now, this kind of went under the radar last week. It's one of those bizarre companies that have quarterly earning at the bizarre time. Okay, regardless, they came out with earning, they beat earning, and they guided down. Okay, that's why you see the chart came down. Now it's boring, but if you want to buy something in the low 60s, collect 3.8 to 4% dividend right out the storm, General Mills is one of those. Now, what is interesting to read on their earning report is a margin increase. They beat on earning, sales dropped, dollar volume dropped, weight dropped. Volume dropped basically, and they use the term deflationary in their earning report. So what's going on is input costs, ingredients, commodities, wheat, sugar, blah blah blah, whatever they use to produce their food is coming down, deflationary. Okay, on top of course cost cutting, being more efficient, all of that. So this is good, but the reason why they have good earning, higher margin is because of deflationary. The bad thing is volume sales went down, total sales went down, consumers are trading down. Instead of buying name brand, they are buying generic. Yeah, instead of buying name brand, they are buying generic from Walmart or whatever grocery store. They're all a trading down trend. Okay, that is what is hurting them. So that's important. Okay, that's what a normal recession is. Consumer trading down. For a long time, up until last quarter, we didn't have that. That was one of the things that the Fed was really annoyed because they do follow this trend. They do follow the data. Okay, they can't see how the consumer is broke. They can't see how they broke the consumer if the consumer keep paying up. And we had that for those that follow me, you know I talk about this. You can't be paying up a complaint that price inflation is so bad. At some point, you had to say, I can't pay up for shrinkage. I can't pay up for a package that is 25% smaller. Okay, that's what's going on. It's a trade down. So GIS, I don't love it here, but definitely one of the uh, I would say safer stocks should we head south in the economy, right? I don't expect big money, but Kellogg, same thing here. I trim. I talk about it, right? It's like that was crazy. This is expected, okay? But that's crazy. Now, would I buy Kellogg here? No. Would I buy Kellogg at 55? Maybe. Would I buy Kellogg down here in the low 50? Yes. Same thing, okay? They will face trade down Kellogg for sure. Do not be fooled. KHC, Kraft, Heinz, look, these are stable, okay? You are talking about not luxury, you're talking consumer staples, and they are behaving so poorly. Okay, this is a sign of very weak consumers because when all these companies are facing deflationary, and I will be reading their earning report for sure when they come out, whenever that is, because this is the kind of movement that show me the consumer is tapped out. The days of paying up for shrinkage is over. Okay, so deflation pressure is coming. So yeah, Kraft Heinz, same thing here. If you want to buy between here and low 30, 52-week low, park your money there for dividend. Now, the one that I do have and like the most is, of course, Hormel. Okay, it's down here. I bought in 30.08 was my entry, and then I have more order between 30 and 28.5. The reason why I like Hormel more than the previous three is the trade down issues. Okay, spam is spam. Spam is delicious. Spam is affordable. There is not a whole lot of generic trade down for spam. Okay, spam is spam. There need to be a t-shirt slogan. There you go. Hormel, hire me as your marketer. Okay, spam is spam. Yeah, enough of my yapping today. Gosh, just went longer than I expected. Okay, but I figure I need to explain the job opening data for those that don't hear that kind of explanation anywhere else, because all you hear on TV yesterday was pundits and economists. We are in a soft landing or no landing scenario because job opening is so strong. This is not a sick economy. Everything is good. Good God. Okay, good God. Good God.